You finish a job, get home, and 2 weeks later, you get the call. Somebody got hurt, something got damaged, and now your name is on the claim. General liability is the coverage that stands between you and paying for that out of your own pocket. If you're a contractor, it's not optional. Not because the law always requires it, but because no general contractor, no property owner, and no client is going to hand you a job without it. So let's walk through what general liability actually covers, what it doesn't, how the limits work, and where people get caught off guard. In case you don't know who I am, my name is Jim Eddington. I run an independent insurance agency called Western Pacific Insurance, and we help businesses with their insurance needs all the time. General liability is something we talk about with business owners daily. Let's say you're a general contractor. Maybe you run crews, framers, concrete, site work, or maybe you're more of a paper general contractor, coordinating subs and managing the project. Either way, general liability is the foundation of your insurance program. General liability, sometimes called commercial general liability or CGL, covers three main areas. The first is bodily injury. If someone who is not your employee gets hurt because of your operations, general liability responds. That could be a property owner who trips over materials your crew left out on a job site. It could be a neighbor who gets hit by debris during demolition. The key phrase is not your employee. If one of your own workers gets hurt, that's workers' compensation, completely separate coverage. General liability is for third parties. The second area is property damage. If your operations cause damage to someone else's property, general liability is often the policy that responds. Your crew backs a piece of equipment into the client's fence, a water truck overflows and floods the neighbor's yard, your framing crew punctures a water line and the resulting water damage ruins the finished flooring below. That kind of resulting damage to someone else's property is where general liability comes into play. There's also a piece of general liability called products and completed operations. This covers claims that arise after you finish the job and left the site. You frame a house, move on to the next project, and 6 months later, the homeowner discovers a structural issue tied to your framing work. That falls under the completed operations portion of your general liability policy. Now, that doesn't mean every cost to fix bad work is automatically covered. Often the bigger coverage question is whether there was resulting damage beyond the defective work itself. But for contractors, completed operations is a big deal. A lot of your liability exposure shows up after you leave, not while you're on the job. The third area is personal and advertising injury. This one doesn't come up as often for contractors, but it covers things like defamation or copyright infringement in your advertising. If a competitor claims you made false statements about their business, this is the part of your general liability policy that would respond. And here's where people get surprised. General liability sounds broad, and it is, but there are real boundaries. And if you don't know where they are, you find out at the worst possible time. Your own employees' injuries, not covered. That's workers' comp. In most states, you're legally required to carry it if you have employees. Completely separate policy. Tools, equipment, and your own property, not covered. General liability only pays for damage to other people's property. If your excavator breaks down, your tools get stolen from the job site, or your trailer gets damaged in transit, you need inland marine or a commercial property policy for that. Your own vehicles, not covered. If one of your trucks causes an accident on the road, that's commercial auto insurance, not general liability. Professional errors, not covered. If you're a design build contractor or you provide value engineering or consulting on a project and your professional advice leads to a problem, general liability typically excludes that. You need professional liability, sometimes called errors and omissions, to fill that gap. And pollution, generally not covered. Most general liability policies exclude claims involving mold, asbestos, chemical spills, or environmental contamination. If your work involves those exposures, there's a separate pollution liability policy for that. Employment-related claims, things like wrongful termination or discrimination, are also not covered under general liability. That's a separate policy called Employment Practices Liability Insurance. The point here isn't to scare you, it's to make sure you understand that general liability is one layer, an important one, but it's not the only coverage your business needs. A good insurance program stacks these layers together so the gaps are closed. General liability limits have two numbers, and both of them matter. The first is the per occurrence limit. That's the most your policy will pay for any single incident. If your per occurrence limit is $1 million and a single claim comes in at $800,000, you're covered. If a claim comes in at $1.2 million, you're responsible for that $200,000 above the limit. The second is the aggregate limit. That's the total amount your policy will pay for all covered claims combined during the policy period, usually 12 months. Once the aggregate is used up, your insurer stops paying until the policy renews. Most small contractors carry $1 million per occurrence and $2 million aggregate. That's the minimum you'll see in most commercial contracts and lease agreements. Mid-sized contractors, and I'd include a lot of general contractors in this category, typically carry $2 million per occurrence and $4 million aggregate as their base general liability policy. That's not an umbrella or excess layer. That's just a standard GL policy with higher limits, and it's pretty common. Here's where it gets real. Let's say you have that standard $1 million per occurrence, $2 million aggregate policy. Claim number 1 comes in at $700,000, it's covered. Claim number 2 comes in at $900,000, it's covered. But now you've used $1.6 million of your $2 million aggregate. If claim number 3 comes in at $600,000, your policy only has $400,000 left. You're paying the other $200,000 yourself. One more thing on limits. Your general liability policy usually has a separate aggregate for products and completed operations. That's a separate bucket from the general aggregate. So claims that come in after the job is done, the completed operations claims we talked about, draw from their own pool. That's actually good news because it means a premises claim during the job doesn't eat into the limits available for a completed operations claim after the job. If you're a contractor working under a general contractor or a general contractor working for a property owner, you're going to run into additional insurance requirements. We did a whole video of certificates of insurance, and this ties directly into that. When a general contractor requires you to add them as an additional insured on your general liability policy, they're asking for coverage under your policy if a claim arises from your work. If your plumber floods a unit and the property owner sues the general contractor, the GC wants your policy to help defend and pay that claim because it came from your scope of work. Most commercial contracts also require primary and non-contributory language, which generally means your policy responds first without seeking contribution from the other party's insurance. And they'll often require a waiver of subrogation, which prevents your carrier from going after the general contractor to recover money after paying a claim. If your policy has blanket additional insured and blanket waiver of subrogation endorsements, these requirements can often be handled without scheduling each party individually, assuming the contract language lines up with the endorsement wording. If you're getting certificates of insurance kicked back repeatedly, that's a sign your coverage may not be structured for the work you're doing. Most general liability policies for contractors are written on an occurrence basis. That means the policy in force when the incident happened is the one that responds, even if the claim gets filed years later. In construction, that matters. A foundation issue or waterproofing failure might not show up for months after you've left the site. On an occurrence-based policy, the coverage from when you did the work is the one that kicks in. Claims-made policies work differently. The policy in force when the claim is filed is the one that responds. These are more common in specialty areas like professional liability. If someone offers you a claims-made general liability policy, make sure you understand the difference and talk to your agent about whether that structure fits your business. So what happens even when your base general liability limits aren't enough? That's where excess liability and umbrella policies come in, and they're not the same thing. An excess liability policy sits above your general liability and provides an additional layer of limits once the underlying coverage is exhausted. If you have a $2 million base general liability policy and a $5 million excess policy, a covered claim could potentially be paid up to $7 million. The excess kicks in after the underlying general liability is used up. A commercial umbrella policy also extends your limits, and in some cases it may provide broader coverage than the underlying policy, but that depends entirely on the carrier and the policy form. It's not something you want to assume. For contractors, this matters because contract requirements often demand limits higher than a standard general liability policy provides. A general contractor bidding on a large commercial project might see a requirement for $5 million or $10 million in total limits. You're not buying a $10 million general liability policy, you're stacking an umbrella or excess on top of your base coverage to get there. The other reason this matters goes back to that aggregate example we talked about. If multiple claims eat up your general liability aggregate, an excess or umbrella policy gives you an additional layer before you're paying out of pocket. For contractors running multiple jobs at the same time, that extra cushion can be the difference between a bad year and a catastrophic one. The price you pay for general liability depends on a few things: your classification code, your exposure base, your claims history, and how you manage subcontractors. Classification code is the big one. A roofing contractor pays more than a painter because the nature of the work carries different risk. Residential versus commercial, ground up versus renovation, all of that factors into how the carrier sees your exposure. Depending on the class of business and the carrier, your premium is often based on payroll, revenue, or another exposure base. More exposure means more risk in the carrier's eyes. That premium gets trued up at audit at the end of the policy period. Claims history speaks for itself. Multiple general liability claims in the last few years, and your rates are going up. Some of your carriers may not want to write you at all. And if you're a general contractor letting subs on your site without confirmed insurance, that's a red flag for underwriters. Carriers want to see certificates of insurance from your subs, active coverage verification, and contractual risk transfer in place. General liability is not every policy your business needs, but it is one of the core policies that keeps one bad incident from becoming a business-ending problem. If you're a contractor or a business owner and you want someone to look at your general liability setup, whether you're starting fresh or outgrowing your current program, or you want to know if you're covered the right way, that's what we do. We write commercial insurance through carriers like Liberty Mutual, Travelers, Progressive, Guard, and others. And we work with businesses in Nevada, Arizona, Utah, and California. Click the link below to get a quote or start a conversation. Thanks for watching.